Hello, everyone. My name is Money, but I would like to welcome everybody first to the first ever episode of our podcast. And this is sort of our way to invite a conversational and informative talk about tariffs and their impact on Cambodia, specifically regarding the legal landscape. And in today's episode, our first ever episode, this is something that we wish to inaugurate, the kickoff of our first ever series. So the U.S.'s sudden announcement of the reciprocal tariff policy on April 2nd, followed by its implementation on April 9th as well, with tariffs reaching pretty much 49% for Cambodia. This sent shockwaves globally, and the subsequent 90-day pause for negotiations has ignited discussions on the nature and the impacts of these tariffs and the economic outlook in general for these affected nations. And I believe personally that everybody should be educated on the nature of these tariffs, their implications, their implementation, so that we can have a better understanding for everybody to be equally informed. And in doing this, joining me today, we have one senior and one junior who will help us unpack this topic just a little bit more, giving us some fresh perspectives, different experiences. So I would like to give a warm welcome to Rethda Navinth and our girl Chhenghuy. May you guys please just introduce yourself very quickly. One you go first.
Okay. Thank you, Nit. My name is Navin. I'm currently a senior associate here at Rajah Tann Sok Heng Law Office. I've been with the firm since 2017, and I'm honored and excited to be a part of the first episode of this podcast.
Okay, thank you so much. I'm absolutely glad to have you here. Chhenghuy, can you introduce yourself, please?
Sure. Thank you too. I'm really excited to be featured in the first ever podcast as well, especially on a topic that is currently ignite my interest as well. Let us see. Yeah, a little bit introduction about myself. My name is Chhenghuy, and I am a paralegal at Rajah Tann Sok Heng, which for about nearly a year right now.
Oh, that's amazing. So I've gathered both of you today to sort of break this down in a way that I believe everybody can follow. And I want everybody to leave here a little bit smarter than they came. I believe that's the whole gist of what we want to do. But let's just start off very simple. What exactly are tariffs?
Simply put, tariff is a tax imposed by one country on the goods and services of another country. As a result, it increases the cost of imported goods, making them relatively more expensive than domestically produced goods. So these are the effects of tariffs.
Oh, I see. So are there like different types? Can you also just go into that as well?
Yeah, sure. There are three types of tariffs. First one being ad valorem tariffs. Ad valorem tariffs are calculated as a fixed percentage of the value of the imported goods. For example, a 10% ad valorem tariff on a $1,000 imported machine would result in a $100 tariff. So the total value, the total amount would be $1,100.
And this is the common type?
Yes,
Yeah.
this is a common type. The second type would be specific tariffs. They are a fixed amount levied on a fiscal unit of the imported good, regardless of its value. So, for instance, a 50 cents specific tariff per kilogram of imported sugar, that's a specific tariff.
Oh, I see.
So these are often used for standardized commodities. And the third one is compound tariffs. They are a combination of both ad valorem and specific tariffs. For example, a tariff of 5% ad valorem plus 10 cents per pound on imported wine. This allows the government to address both the value and quantity of imports.
What are the primary goals, really, would a government typically have when imposing these tariffs?
I believe there could be like several reasons for a government of a specific country to impose a tariff. Well, tariff generally is one of like trade policy, among other kind of trade policy for a government to impose in relation to trade. So I think my opinion would rests on how the government would want to protect the domestic industry, and it likely encourage more local production, right? So tariff would raise the cost of the imports of goods from another country, and then make the domestically produced good more attractive, more competitive, and then it can shield like a local industry from foreign competition as well. So allowing the local industry, local company to grow, to create more jobs and stuff. So it would incentivize the local consumer and businesses to to like produce or purchase locally made it good. Other reason could be raising revenue, because of course when you put tariff on a specific good, you gain more value from the tariff, right? Like as Ray's example earlier, like 10% of a imported good, so you gain like uh, $10 of like $100 made good, imported good.
And that would classify as revenue being raised.
Yes, because tariff would be paid to the government, and then it would be classified as the revenue that the government earned from that. And it could also be used as a retaliation measure, or maybe a national security measure as well.
Nit, I just want to add one point to Chhenghuy response earlier regarding the revenue. Tariff historically is a significant source of income, and this is actually a point frequently made by the current U.S. administration as well.
I see.
That tariff can bring in billions of dollars into the United States. So raising revenue is actually quite a significant point as well. So that's all I want to add here.
But in this context, why do you think the U.S. specifically is imposing a tariff policy on Cambodia? Why specifically Cambodia, do you reckon?
Um, well, it's not just Cambodia. Like, there's a lot of country that the United States imposed, right? Well, specifically turning Cambodia, I believe there's actually absolutely no interest that the United States gain from imposing this tariff on Cambodia. Cambodia industry did not compete with the United States industry. We produce low cost goods like textile, footwear that do not compete with the American industry or business at all. But with regarding to the reason, I believe what was stated by the United States government would be to restore trade imbalance, where because United States is experiencing trade deficit compared to Cambodia. But one can only guess for real life what exactly is the real motive behind the imposition of this tariff. But let's understand that this policy is opposed of friends and foe alike of the United States, and we can see that the EU and Japan also got hit by 20% and 24% tariff respectively. So this tariff is more like a blanket measure at the present time.
If this is the case, is it true that Cambodia imposed like 97% tariffs on U.S. products? And is it correct that this is a reciprocal tariff policy?
So to answer your question earlier, the first point, is it true that Cambodia imposed 97% tariff on U.S. products? For the case of U.S. tariff, we understand that the maximum tariff imposed by Cambodia is only 35%, not 97%. This is also reflected in the recent USTR report. So it is not true. The actual rate is 35%. But let's dive in deeper how the U.S. administration came to 97%. The U.S. administration based its calculation on the trade deficit number, divided by total imported goods from Cambodia, and you get 97%.
I see.
So on to the second part of your question. Is it correct that this is a reciprocal tariff? Well, let's discuss what reciprocal tariff here means. Reciprocal tariffs are tariffs that one country imposes on another in response to similar actions taken by that other country. It comes from the idea of reciprocity, or the meaning, of the word reciprocal, which means given or done in return. Basically, if country A imposes high tariffs on these goods, then country B retaliates by imposing equally high tariffs on goods from country A. So Cambodia does not impose 97% tariff on the United States. So in a way, if we go strictly by this definition of reciprocal tariff, then it's not correct. This is not reciprocal because Cambodia, the highest tariff rate from us on U.S. products is only 35%. But the U.S. administration has a different way of calculating.
Included otherwise,
Yes,
basically.
exactly.
But the actual rate is actually only 35%. But in this case, it has brought about a lot of negative connotations and negative effects. But talking about these negative effects, what do you think are the true impacts of U.S. tariffs on Cambodia?
We have to understand that the United States is like the biggest market for Cambodian trade. So of course the direct impacts would impose on especially the business owner in Cambodia who are actually in a export reliant industry, exporting products to the United States. So for example, like garment, footwear, textile, those are like the top export product to the United States. And there's also like other product like household durable, chemical, or mining related good. So these business will be directly impacted by the tariff that they would have to, if they export to the United States, they would have to like pay the tariff that is imposing. Well, for now, the tariff is passing with only 10 blanket tariff imposed, but if the 49% U.S. tariff is going to implement without any change or reductions, a lot of business who are exporting to the market of the U.S. from Cambodia will be directly impacted.
I think we can narrow this down to the negative effects would be the economic growth of Cambodia. If Cambodian goods receive a 49% tariff slap, that means the imported Cambodian goods into the U.S. markets will see a huge price increase by at least 49%. So that would effectively make Cambodian goods less attractive for U.S. consumers.
And just less accessible in general, yes.
Yes. So when there's less, when it becomes less attractive, there's less demand. When there's less demand, factories that are producing these goods in Cambodia take a hit on their income. And it may lead to factory closures, and it may lead to joblessness of thousands of our workers.
In general, so it can lead to the closing of multiple factories, unemployment, and just slower economic growth is what I'm gathering here, yes?
Yes, exactly.
Oh, I see. But now that we've talked about the different impacts of tariffs and their impositions in general, when I'm looking at this current situation specifically, we're seeing a sudden and significant hike in these use of tariffs. If these measures begin to cause serious economic or trade disruptions apart from these negotiations, are there any legal mechanisms available, like under international trade law, that a country could just use to respond or just seek remedies and solutions for the impacts of these tariffs and to protect their own interests as well?
Well, in relation to trade issues specifically, we do the most well-known mechanisms, or let's just say the organization, is the World Trade Organization, or known as the WTO. So, let's go to the basic of how WTO work, or what is it. Uh, I think most of us know about it already, right? It's the international organization in govern international trade related, which their main goal is to promote free trade, fair trade, of course, it's also act as a forum for trade negotiation between country as well, to set a global rule, harmonized rule, related to goods, service, for country to trade with one another. And of course, in relation to trade dispute, likely like in this case of tariff, if there could be any dispute related state member to the WTO, which include Cambodia, can also bring their claim and settle dispute through the WTO legal mechanism as well.
Oh, I see. But in connection with these tariffs, how could the WTO come into play?